Okay, so when I say the word Kawasaki, what's the first thing that pops into your head? For most of us, it's probably a sleek, powerful motorcycle, right? And you're not wrong. But that's only seeing a tiny piece of a much, much bigger picture. The real story here is way more complex and, honestly, a lot more surprising. So let's pull back the curtain and see what's really going on with this iconic brand. So yeah, what do motorcycles, remote surgery, and hydrogen fuel have in common? It sounds like a weird riddle, doesn't it? But the answer is a single company, Kawasaki Heavy Industries. And how these seemingly random things are all connected? Well, that reveals a fascinating strategy that's unfolding right now. It's one that balances the roar of an engine with the quiet precision of a surgeon's scalpel. All right, so to understand what's happening, we've got to start with their latest earnings report. This is for the first quarter of their 2025 fiscal year. And right away, the numbers tell a really confusing story, a contradiction that definitely had people scratching their heads. Check this out. On one hand, Kawasaki posted record-breaking revenue, a massive 488.4 billion yen. I mean, sales are absolutely booming. But then you look at the other number, the actual profit, and it's plummeted down to just 4.2 billion yen. That is a huge, huge drop. So that's the big mystery, right? How in the world can a company sell more stuff than ever before, but end up with so much less money in its pocket? To figure that out, we have to pop the hood and look at all the different engines that are driving this company.
And here's where you can really see this internal tug of war. Some parts of the business did great. Look at rolling stock. We're talking about things like railway cars. Their profit improved by over 5 billion yen. Awesome! But that success was almost completely wiped out by major struggles in their aerospace division and, yep, even in their world-famous power sports and engine group. So, that internal mix is part of the answer, but it's not the whole story.
The other half of the puzzle was a perfect storm of stuff happening outside the company. 3 big headwinds hit them all at once. First, the yen got stronger, which sounds good, but it actually erased about $3.2 billion in foreign exchange gains. Ouch! Second, tariffs in the US drove up cost for their power sports business. And third, they had higher fixed costs from investing in new production and shipping out new aircraft engines. So you add all that up, and those record sales just got eaten alive. So facing all this pressure, what did Kawasaki do? Well, they didn't just sit there and take it. They made a massive strategic move designed to shore up their finances and basically protect themselves from future shocks like this. They sold off a piece of the crown jewels. A 20% stake in their most famous division, Kawasaki Motors, went to the huge trading company Itochu. And the price tag for that slice of the business? A staggering 80 billion yen. This wasn't just a cash grab, though. It was about using that cash in a very, very smart way. And here's their 3-step playbook for that money. It's actually pretty simple. Step 1, complete the sale. They did that on April 1st. Step 2, immediately use a big chunk of that 80 billion yen to pay down debt, which makes their balance sheet a lot healthier. And Step 3, team up with their new partner, Itochu, to launch a finance company in the US. The goal there? To help even more people buy their motorcycles and four-wheelers. It's a classic move. De-risk today so you can invest in tomorrow. And that brings us to the really cool part of this story. Because while one hand was busy securing the company's finances, the other hand was placing some incredibly bold bets on what our world is going to need in the future. See, Kawasaki isn't just thinking about the next earnings call. They are tackling massive global challenges by investing in 3 key areas: advanced healthcare, clean energy, and food security. These are their 3 big bets on the future of society. Let's start with healthcare. I want you to just imagine this for a second. In June of 2025, a surgeon is sitting in France. They pick up their controls and they perform a delicate procedure on a patient who is all the way over in Japan. That's a distance of 23,000 kilometers. It is the longest remote surgery ever successfully performed. And this wasn't just some lab test, you guys. This was a major demonstration of their robotic surgery system, which is called Hanator. And it was even directed by a world-renowned expert. This is the kind of tech that could one day bring elite surgical skills to the most remote corners of the planet. And get this, the company behind it is expected to actually become profitable this year.
Okay, big bet number 2, clean energy. Kawasaki is going all in on building what they call a hydrogen society. And this isn't just talk on a PowerPoint slide. This past May, they actually started construction on the world's first commercial-scale base for liquefied hydrogen. And in that same month, they launched a study to figure out how to build the next generation of giant ships needed to transport that hydrogen all around the world. They're literally building the entire supply chain from the ground up.
And finally, we get to the bet that kind of comes out of left field, fish farming. You know, it's so unexpected that even the company's own presenter, Mr. Yamamoto, basically called it out during their presentation. A heavy industry giant getting into aquaculture? I mean, why? Well, the answer is actually brilliant. Kawasaki is jumping in to tackle global food security. They realize that their deep expertise in things like water treatment systems and fluid dynamics, from building ships, could be applied here. The result is a brand new system that allows for fish farming at 4 times the normal density. This can open up huge stretches of coastline that were previously thought to be unusable for aquaculture. It's a perfect example of using old-school industrial know-how to solve a very modern problem. So when you put all these pieces together, a completely new picture of Kawasaki starts to emerge. Yeah, they still build the incredible machines that dominate the pavement, but at the exact same time, they're transforming into a technology pioneer, building the literal infrastructure for our future. What this all means is that their tough earnings report wasn't just a story about a bad quarter. It was a snapshot of a company in the middle of a massive transformation, managing the pressures of today while building a radically different tomorrow. So it leaves you with one last question. The next time you see that green Kawasaki logo flash by, what are you going to think of? The thrill of the open road, or the precision of a robot in an operating room 23,000 kilometers away?